Hello, and welcome to another episode of iThrive FS Live Analysis and Trading. And in today's section, we're going to be looking at a couple of Forex instruments that most likely will provide us with some lead in trading the market profitably today. If you are coming here for the first time, we say welcome. And we'll also encourage you to subscribe to the channel and also put the alert on so that you'll be able to get alerts whenever we have a live trading events. Okay, today we're going to be looking at firstly gold. If we have time, we'll look at JPY and then USOIL, maybe one of that two pairs that we can spot some good trading opportunities and provide you with our perspective for this week. Guys, get ready. This week is loaded. I'm so excited because there were a lot of central bank events last week that dictated the pace, and some pairs have been responding to it. And this week will be a very suitable time to take full advantage of all those decisions that happened last week. And by the grace of God, we'll be able to uncover very good opportunities in this live trading section. Okay. All right, this is gold. Sorry, this USOIL. I want to start with gold. Okay, we've had a lot of analysis on gold, doing a top-down analysis on this very currency pair. And there are so much to see here playing out today. Our perspective for last Monday played exactly as we anticipated it. Okay, we're here around this area that last week, and we confidently saw a trading opportunity that this gold is going to collapse down, and that was what happened into this zone. Looking at the weekly time frame and daily time frame, you observe that this line you're seeing here, that is the weekly and daily uptrend line on gold, which last week got broken and retested and started moving all the way down. Okay, so a few things to understand here. We have psychological levels for gold, psychological level for gold at the zero number, rounded numbers, 1960, as you can see here, 1950, 1940, 1930, 1910, all those zero numbers, okay, 1800, then 2000, all are psychological level and institutional, watch levels, thresholds where they look to take interest or closing trades. So it's important you mark it on your charts if you trade gold very often, because at those levels you see some reactions. In this case, you can see these dotted lines. These dotted lines show us those levels. Here is 1960, 1950, 40, 30, and then we can create others down. Okay, let's put the one for okay, let me set it. Coordinates 1910 here. Then we'll put for 20. You mark your charts. Okay, let me delete this. I was just trying to review a few things. Now you can see that gold is trading in this channel down scenario here. I can spot what we call the PN wave patterns, Elliott wave pattern, PN Elliott wave pattern here. Can down to this place. It made a pushback, came back down here, did a retracement, came all the way down. All right. So usually after these 5 pushes, there will be a correction, an ABC correction. So I want us to put that into consideration as we consider gold this morning. Okay, you can see the ABC correction here, up, then it's coming to come down maybe about 56, about 61.8 level, push back up to this zone before continuing to do another impulse. So let's see this. Back into this zone. Usually from here to here will be the same distance as from here to here. If we can do that, so we can have an estimate. Okay. This may not happen in one day. It may not happen in one day. All right. So I'm seeing this is for our time frame for gold. There is a level of liquidity somewhere here. Let me move this. Can see some liquidity around this level. You know, these are levels where traders usually want to come and pick some trades, and the market makers, they target that place to hunt their stops. There is a level of liquidity here. We're trying to see where gold price might get to and then push back. All right, so this bullish momentum may have to continue up until this area before we can see gold push down. Of course, there is a reversal on gold, and our perspective on gold right now is bearish. So all analysis we'll be doing on gold will be spotting some bearish opportunities, just like what I did now. We had these 5 waves push down to this psychological level, 1910 per ounce, USD per ounce, and it hit this trend line. We have a trend line for gold here, expected to retrace, which it did, and right now it's pushing up into some level of liquidity. Market will have to go there to pick some liquidity and then continue back downwards. So gold might push up to from where it is currently to these levels before we can experience another move downwards. Okay, so we have to watch this. If I move this time frame to 1 hour time frame, you can see there are still some opportunities between this zone and this. From here to here, price may want to retest the 1940. Okay, may want to retest the 1940. That's what I'm seeing here. There's a slight pullback here when it touched the trend line. So it pushed down to pick up momentum to go back up. So if you want to trade this, if you want to trade gold this morning, I may want to wait for this 1 hour candle to finish forming. If this candle moves back to this level, or become exactly the length of this bear candle, we'll have we'll have a railway track candle pattern here, which might suggest price moving back. If it becomes engulfing, if this candle closes right above this high, above this high, if this can closes right above this high, then we expect price to continue to push up back to this zone, before the reversal. Okay, back to the zone before the reversal. So there's still window for price movement for gold, about 80 pips thereabout, still, you know, expected to this level. This is another psychological level that have been successfully now, it's been successfully broken. It got broken, retested, on it. And if it closes right above it, gold will move back to this zone, all right, to sweep some liquidity around this area. You can see a lot of liquidity here before it starts to come down. This is what we are thinking. But in the long run, gold is bearish. So gold might be looking at doing an ABC charts formation here. Let me get ABC. Where is ABC? Okay, here. Major wave one wave, then two, came back, then might get back to this place. So the moment this finishes, we're expecting gold to pull down. So to trade it, there's still some liquidity here. Market might just come here, so it can come back. But if it closes above this candle right here, it will continue up to this level to get strong money, and then the market makers would have feel their signs, their footprints of some others with the left around this area, 1940 area. Okay, so they might just go back there to close those others at fair value and then continue all the way down. So we might be looking at this ABC pattern, play out today, 1, 2, 3, all right, before the gold moves down. We see a very good opportunity, market closing above here, then we're going to make a call right here while this string lasts. Okay, so what is our perspective on gold? Bearish in the long term, but bullish in the short term. It has the capacity of moving back to this level. And of course, there are fears. Gold is a safe haven metal. Many investors, hedge funds, move resources, huge, flows of investment portfolios into gold whenever there is a global crisis. And right now, there are fears, economic fears of a global recession, certainly. The inflation rate globally has been so stubborn right immediately after the COVID. Okay, if you observed all the 8 major economies around the world, they've been hiking their interest rates, except the Japanese Bank of Japan, the Central Bank of Japan. They've not, made any move to increase their interest rate. They are still in that negative, area of minus 0.1%. And the reason for that is that they want to make the yen cheap to attract a lot of investment into their economy. And if you observed all the economic news that have been released, particularly last week and 2 weeks, there's still no much sign of inflation getting cut. So the Fed fine posts last week at their FOMC meeting, interest policy rate decision. They paused to watch at what will unfold, in terms of the inflation rate. But at the chairman Jerome Powell's testimony before the Congress last week, he sounded very hawkish. He made it clear to them that inflation has not been fully curbed, and there are still more rooms for them to hike interest rates. Okay, in order to bring the inflation figures back to 2.0%. Okay, so there is a hawkish stance for the U.S. economy, for the Fed, which implies that they are going to hike interest rates. They still have more meetings to go this year. Maybe there are two FOMC meetings remaining this year. One of them may see them hiking interest rates. And if those interest rates are hiked, we're going to see inflation rates in America will be attempted to be curbed. But then, as they continue to hike this interest rate, there's also a negative impact, and that is the economy going into recession. So it's a whole lot of macro economics confusion here that gold is getting this trend. It's one reason that gold is getting this trend. But ordinarily, gold is supposed to continue in its descent. But this morning, when we saw this bullish engulfing, that gave an indication that this level might be broken, and it got well broken and then retested. You can see how price is battling that trend line and also the liquidity level. So we have to watch. If price closes above this, there's nothing again looking towards your left-hand side that will stop gold from getting to 1940 threshold before the expected drop. Okay, so mark all these things and let's see how it plays out today. Next, I'll move to which one now? Let's go to the dragon, the GBP JPY. This pair has been bullish for a long time, and we already had given reasons for that. Reasons for that are being that differential in interest rate policy between the UK and Japan. All right, the Bank of England last week hiked interest rates from 4.5 to 5%. That hike was about 50 basis points. Actually, what was anticipated was a 25 basis points interest rate hike, but it came out printed out at 50 basis points, making it 5% interest rate. And that's a tool. Interest rate is a tool that the central banks, deploy when inflation in that economy has risen above the acceptable threshold. Okay, so that policy differential between Japan and United Kingdom is what has been seeing this pair moving always bullish. It's been bullish for a very long time, giving us some very wonderful structures that you can depend on. Anytime it is broken and retested, price moves to the next level. It got here, broke it, retested it, it moved to the next level and continued to go up, made a high here, came back here, it's pulled back to this level, and I think this level is around the 61.8 retracement level. Let's look at that. From this low to this high, we use our Fibonacci retracement tool to design. So you can see exactly the retracement happened within this zone between 50% and 61.8%. All right. And it gave us this spin bar. We made a call, it returned again with this very long leg, dragon dodgy. And since then, price have been seen to get appreciated. It got broken. This level got broken, the high, just as in the way the structure for this pair usually presents itself. This high was broken, okay, got retested. It's just retesting it now. Our bias for the Dragon GBP/JPY still remains bullish. You can see a trend line here. You can identify a trend line here. A short-term trend line. Okay, you can see this. And this has been tested 1, 2, 3, and this is the third time. Market level got broken again and is currently retesting it. So what do we advise here? You can see this for the last 4-hour candle. Last 4-hour candle gave us a very strong rejection signal here in this hammer that pushed into this level of confluence, previous level of resistance that is expected to play out as a confluence, support zone here. And it happens to be also at this trend line, this short-term bull trend line. Okay, there is a strong liquidity zone here, which we can't overlook. So if price moves from this level into this zone, there are two things that may be playing out into this zone, or maybe slightly even break it. Break it. The market makers might just be coming back to sweep some liquidities, claim some stop losses here, okay, and then come back to this trend line before it can break. So we have to give it a very um, close look. If we are still on the trade, I still have a couple of positions on this trade when we made a call from here. All right, I'm still holding them. But if you want to enter this trade, avoid this area. Avoid here. Price might push into the zone and come back to retest. Okay, I'll be very comfortable advising for a trade when the market breaks above and the candle, the body of the candle stays above, not breaking with. If the candle breaks like this, if it breaks like this and you have the wick on top, okay, so if the candle breaks like this, you can see the body closes above this area of liquidity. Okay, then we can begin to look for some opportunities. It might give us a bullish harami here, a short candle forming here, back to that level of liquidity. Okay, retesting it. Then this would be a time, a very safe time to pull this trigger and go up. So around this area, quite above this level of this liquidity zone, I'll be comfortable to, if the market closes above that liquidity zone, I'll be very comfortable to buy a close above it. All right, a lot of patience needed here. Little patience needed here, but then we're on 4-hour time frame. If we scale down to lower time frames, you can see more clearly. Let's look at here. The candlesticks patterns is very, very, if you have very good knowledge on them to help you in positioning your trades and even your profits targets. Okay, we can see a lot of hammers here. This one hammer, this another hammer. These are all indicative of strong bullish momentum in the market. All right. There is a level of inefficiency here. These two lines, the previous inefficiency that has not been, okay, here, not been fully mitigated. Fully mitigated. But let's watch what happens here. I'll feel very comfortable taking a trade when this zone, buying this this pair, when price escapes this zone. Price escapes this zone. Okay, escapes it, and then maybe a retest. A retest. Price has touched this trend line and pushed back up, so it might be coming here to get some momentum, gain some strength, and then begin to push into the zone. So if we see an opportunity here, maybe giving us a candle rebound of, a signal coming from here, you can do a short buy from here back into this zone and take your profits. Okay, when this liquidity zone is broken, then we can look forward to buying the GBP JPY. Please avoid this zone. Avoid it when price moves into it. Totally avoid it. All right. Okay. Then we move to US oil. US oil had been very consistent for a long time now. We've been trading this pair, following it very, very closely. Last week, we made a call on US oil call on US oil. So one, before you trade US oil, it's important you understand some of the drivers. What are the things that affect the price of US oil? Some people have come to say there are some currency pairs that are closely related to, correlated to the US oil prices, or maybe the dollar's strength thereabout. Yeah. Apart from all that, the supply and demand of oil globally is what affects the US oil. The second thing is anything that happens to the major consumer of US oil. Okay, that's the West Texas Intermediate oil. The major consumer of crude oil around the world is China, because China is the global production and manufacturing hub. Okay, so much energy needed in China to produce a lot of things. Okay, so if the economy of China is perceived to be shrinking, all right, it affects the US oil. If economy of China is expanding, meaning that there are more industries, there are more production work going on in that zone, the US oil will be in high demand. So if it's in high demand, the price will go up. The price will go up. So if the oil prices goes up, it affects Canadian dollar. If it goes up, it affects Canadian dollar. It has a way of also affecting the Australian dollar, because Australia economy has a bilateral relationship with China, right? So if China is expanding, leading to high demand in crude oil, which will, directly impact on the price to go up, all right, the AUD, Australian dollar, will also strengthen. So you can find a way that you can get some correlations, some fundamental sparks that you can use to support your technical biases on the US oil. Forces of demand and supply play out a lot on US oil and determine the price. But apart from that, it can also be good, okay, looking out for some technical analysis on the US oil. It obeys technical analysis a lot. I see it doing that, right? Let's look at here. This is daily time frame. Okay, maybe we should move to weekly. Okay, from the weekly time frame, we can see that the US oil is in a downtrending market. So the market environment here is bearish. Is bearish. So anything coming up is riskier now to buy than to sell. It's riskier to buy than to sell. Another thing, another threat to the price of the West Texas Intermediate oil is the discovery of other renewable energy sources. Technology. If technology comes up with other alternate source of energy apart from crude, whenever you get such maybe breaking news, definitely it will cause the demand for crude to drop, and then the price will crash. The price will crash. But for now, and I think that explains why this crude got to its all-time high of about 133, about $130 per barrel. $130 per barrel. Okay. The breaking news on discovery of some renewable energy sources, maybe shrinking of some economies that demand for crude, is what has been responsible for this bearish direction. In trading, I like to look at technical analysis and also have a fundamental backing for my bias and the direction I look at the market. If that is strong and that driver is still in place in the market, still in place, affecting and impacting the market, then I can trade in that direction of that influence. All right. So moving to the daily time frame, it becomes clearer how that this market have been making some highs and then it pushes down, to this area. This zone, if you look at here, this is a very key level of support and resistance here. Key level of support and resistance. So when we saw this, it became a point of interest that when price taps into this area, it's going to bounce back up. And it happened exactly like that. So you can see price, when price tapped into here, we called for a buy in the oil. You can see also these levels of liquidity where a lot of traders will want to go. You can see here the price entered into this place and pushed down here, pushed down. You can observe some, push above this zone just to clear some, stop losses. The market makers, those who saw this earlier on, they would, be looking to, going short from this zone. Okay, so those who took trades right here, you can see here when the market pushed into this zone, would have positioned their stop losses above. They went back, they cleared it, and then started pushing the price downwards. Okay, going straight to where we are, where the current price is. This guy is now seen to be ranging from here to here. There seems to be a range. Okay. This is a strong impulse. Impulse is sharp, fall or rise in price in the direction of the trend. The trend is bearish, so this is an impulse. And since then, the markets have been ranging, seriously ranging. Let me remove all this to get this place clear. Okay, the market has been ranging between these two levels. 3, 4. Okay, you got here. It might make the fifth push. Just expect something like this to top this line before market price will come all the way down. So looking at this, US oil is in a consolidation zone right now. It's the consolidation zone on the daily time frame. All right, and look at here on this daily time frame, we are seeing something very indicative. This is a doji. You can see this doji after this very strong push down. Price pushed into that zone, okay, support zone, and formed the doji. I don't know how clear it is. I just keep blowing so you can see it. It's very faint. You can see this doji here. So this is a very strong bearish rejection candle. This dragonfly doji, bearish rejection candle, which is supporting the market to move up. Okay, so it's indicative that price will most likely get back to this level, touch this trend line, and now start coming down. So we're going to be looking, for opportunities to buy the US oil as it is now. As it is now, at least we can target this level. This level can be our first target here. This will be our first target. So markets might want to go back here, pick up some liquidity. I can see some others left behind around this area by the market makers. May go back to that area, sweep some liquidity and come back. If you Brexit, we're going all the way to this zone before the price will continue in its downtrend. So if you want to trade gold, please, US oil, if you want to trade US oil, be abreast of information happening with Chinese economy. If the Chinese economy is expanding, be sure, be certain. If it's expanding, it means that the demand for oil will be much, and then the price of oil will grow up. But some of the news we got recently, there are concerns about Chinese economy, shrinking a little bit, and that also is helping gold to move up, and then it will also cause the the oil to consolidate. So looking at this level, you can see there's some liquidities around this zone. This doji technically is showing us the price will go back up. Let's look at 4-hour time frame. And that, I think, has started happening. Let me remove this now. All right, so you can see again, this is a hammer that tapped into that zone, and pushed up. Price has been since then going, in the bullish direction. So at least we can look for opportunity. Let me give you maybe a buy stop order. Into this zone, and then just around this area. So buy stop order would be appropriate on the 4-hour time frame. Before that, let me check what's happening in 1 hour. Let's see. Okay, 1 hour is also giving us a sign. This is a bullish engulfing here. There's a bullish engulfing here, and it's trying to give us a bullish flag. You can see that. You can see this. You can see this here. A bullish flag. So the break of this flag will coincide with, all right, where we put our pending order. So the break of this flag, will see the market price move back up. So you can see how on the 4-hour time frame, you couldn't have seen much of this. When we moved to the 1 hour, it was clear that this is a flag, a bullish flag forming after this bullish hammer tapped into a support zone and closed above that zone. All right, closed above that zone. I bought this US oil. My first entry was tapped out. Okay, it was tapped out, and then it was actually a second entry that gave us all this, and I'm still holding holding on to that trade. I'll still keep holding. So we're going to wait for a break of this resistance trend line for the flag, for the bullish flag. Let's connect it to for the bullish flag. A break of this level will see market price move. So 4 hours again, so we can put the coordinates properly. All right. So here could be a stop loss. No, this guy is very heavy, honestly. So your account should be big enough. Try to make your account big enough so you'll be able to trade all of this. I'm trying to help you get levels, about 3 profit levels. Okay, I'm going to put that one very well. This is going to the extreme, so this would be like swing 1974, and I mean $74 per barrel. About 400 pips. 400 pips is expected if this breakout happens. If this breakout happens, we're expecting 400 pips to the upside. If that breakout happens. All right, I see it's happening. In the 1 hour time frame, it's giving us some signs. We can find this bullish engulfing candle here. All right, And this guy has done an ABC correction in between. Okay, you can see an ABC correction here. ABC correction is actually a corrective wave. When the market makes an impulse, as it did here, it corrects in ABC. Okay, you can apply for a course on Elliott waves. We'll give you that course on Elliott wave, exactly how it works, so that you can incorporate it with your trading, plan. For now, oil, we are bullish on oil. We have a bullish perspective on oil. Then gold, yeah, gold. You can see gold has broken that. It has broken. It's forming now an engulfing, just like we projected. You can see it's forming that. So if this candle, you have to wait for this candle to finish, and it's still about 18 minutes more for this candle to finish. So when this candle finishes, if it finishes even the way it is, it's still good for you to have a bullish um, test for gold. All right. Initially, we were thinking of gold retracing, pushing back um, from this trend line. All right, this short-term trend line. Initially, we thought it's going to retrace from here down before the news on fears, global economic fears on the global economy entering into recession. Gold being a safe haven, currency or metal where you have a lot of inflows, okay, to preserve value, in the midst of global crisis. So what we're experiencing on gold is just that flows. It's just that flows. Gold does not have any yield. It's just that close. All right. This is exactly what I was expecting. The dragon has moved back into the zone. It has moved back into the zone. So you have to be watching it. Remember, we are looking for opportunity to buy on GBP, JPY. So if you want to sell, let it sell. Our bias is bullish, and we are looking at, so until this trend line is broken. If this trend line is broken, we know that the correction might be deeper. If it's broken, we're coming back again to this zone, going back down to this zone. But we'll have to keep our fingers crossed as we look at that. Another pair I want to show you is this GBP AUD. We analyzed it last week Monday as well, and remember on the weekly, I think weekly time frame, we identified a triple top on the weekly time frame, a triple top. All the dotted lines are our weekly key levels. All right. So you can see this triple top, which is expected. We're actually expecting it um, to cost the price for GBP to break down to this zone, from here to this zone. Okay, but a lot of things, there's some changes. We're bearish, of course. We started trading it the downside. We're able to accumulate some pips. I'm sure we got over 200 pips from that level. Where we moved, if you see this, moving to the daily time frame, it's still the same scenario here. Price moved into this level of resistance, and then push all the way down. You can see we took this trade right from here all the way to this place. We're making calls on it. Okay, so what you do, we're on daily time frame. The previous day was strongly bullish, and that is what's still giving the pair the momentum. But before then, I showed you something on 4 hours here. If you could still remember on the video, you can check video of last week Monday live class. We looked at this. The market actually was retracing, but then I'm getting here, the momentum drops. Observed it. You can see this bearish flag here. Okay, that retrace with ABC wave. You can see that corrective wave ABC I showed you on USOIL a while ago. 1, 2, 3. Okay, that's a bearish flag, and then it pushed down again from here to here, then from here to here again. It pushed down and made this low. So when I saw this, okay, price moved back into this zone. It was very clear. It was clear that an inverted head and shoulder was just in the making, and that was it. You can see this. An inverted head and shoulder pattern on 4-hour time frame. Okay, you can see it. Okay, so that day we saw this opportunity market moved and then retraced by, let's look at the retracement from here to this level. Very good. It retraced into our zone, our choice zone of between 50 and 61.8 and pushed up towards. At this retracement, we made a call. It was a live call. At least let's do 1:1. You know, considering this level being a key level, price may get there and react and do something. So we targeted this level. We made about 70 pips in that call. All right. So this was what supported. I can remember I put this arrow here that the AUD, GBP AUD is now going to be bullish, maybe in the short time until we see some confirmations otherwise. And that is what has been pushing this market upwards. It's been pushing this market upwards. Even looking at this Fibonacci retracement tool I drew here, you can see this level, the 127 and 160 minus 161.8 level. These are the swing highs where markets expected to get, but we did not make a call on this, and it has hit all those price levels and back now into the zone, into that same zone of the triple. So when market is right into that zone, what do we do? The advice is to keep off, just watch. We're going to observe it during this week. We're going to observe it during the week because it's a zone of is a strong demand, stronger supply zone. Strong supply zone. So we have to wait. I can't even get some. Let me see if I can find a very good order block here that we can look. You are true. You are. You are. That's too far. Let's look at it from here. This last bull candle here, let's put some liquidity around here. So price moving into this zone can price moving into the zone, retesting the zone can cause this. But again, there is another small bull candle into here. With the markets, maybe it's reacting right now. It's that my advice on this, we have to stay away until we see a very convincing reason why we should go short on GBP AUD. All right, price has gotten to that level. So what you're going to be doing now is to be watching to see a reversal candle or pattern, candlesticks pattern, maybe an evening star, inverted hammer, all right, or bearish engulfing hammer, most especially on this 4-hour time frame. Then, and also price closing below this zone, comfortably closing below this whole zone before we can look for opportunity to trade the retracement of this whole impulse, of this whole bullish impulse. All right, and I'm marking this now for you. If price gets into this area, because in the short term, this is bullish markets. In the short term, you can see it's making higher highs and higher lows. So this is high. So if it retraces into this area, we might look for an opportunity to buy back to the zone. If it retraces here, we might look for opportunity to back into the zone. Okay, but our eye is on it completes or successful reversal of those three triple tops highs that we saw. If this candle closes the way it is, that is the railway track. All right, if it eventually closes, we have 8 minutes more for the candle to close. 8 minutes more for the candle to close. Remember, if gold is going bullish, this JPY usually will have to come down. They're inversely correlated somehow. All right, so if this candle ends like this, fine. It means that most sellers are in the market. If it ends down as an engulfing candle, because we are already at the key level, so price is trying to take decision whether to have a retest of that zone and then pull back, all right, or to continue. So we'll have to wait. If it breaks the zone, we'll buy. If it pushes back down below it, we'll look for short-term opportunities to sell and scalp and get some money out. But I will advise at this level, which is about 1.895, about 1.895. If price moves in the zone, one can look to buy. You can look for opportunity to buy back into the zone, because the short-term trend we are dealing with here is bullish. So if the market enters into the zone and now closes above it, enters into the zone and closes above it with a candle into the zone, okay, that closes here above it, then you can look forward to trading, buying back that candle into the zone. Okay, and here if the candle closes like this is typical engulfing candle, bearish engulfing candle on 4-hour time frame, bearish engulfing candle on 4-hour time frame, and can give some opportunities to sell. All right, opportunity to sell from this zone. And also be careful of here. There are some liquidities here, so the market might just be coming back to sweep liquidity to move back up. So all these things have to play in your head. If you close at the full-bodied candle into the zone, it confirms that the sellers are there, and it's not like market coming back to sweep some liquidity. So just know this, these shadows that are here. This is where those who bought this candle, this is where they put their stop loss. So market might just come in to hunt those stops and then continue to go back up. So a close below this with full-bodied candle, I will scalp down to this zone and then formally buy, because the trend is your friend. The underlying trend we are identifying here is actually bullish. Okay, so it's actually bullish. I will take more risk buying than selling this pullback. So if I have this engulfing pattern in the next 5 minutes put in place, we can sell from here down to the zone and take our profits. Okay, that's how to trade it. USOIL. USOIL is yet to break the bullish flag that we have drawn. Break of this bullish flag, we'll see price push back up. Gold is okay, the 1-hour candle for gold, we are still expecting it to close still around that area. So if you close this full bodied candle here, I wouldn't mind taking an instant buy. I wouldn't mind taking an instant buy if you close this here, and then my stop loss right below. Because what it could have been is that market has broken the psychological level of 1930 per ounce and then retested it with this red candle, then bounced back above it. Nothing stops it from moving all the way down to the zone. And this will now complete the ABC correction of the Elliott wave we identified on the gold. All right, this Elliott wave on the 4-hour time frame. Okay, yeah. This typical Elliott wave that we identified here. Okay, let me use the full symbols now. Elliott impulse wave 1. This is 1, 2, 3, 4, and 5. So it's finished. It ended here. All right. Then we have the ABC, A, B, and C. So the C is where we're expecting it to complete at 1940. The C completes here. Price moves into the zone, completes here. So we can get some 80 pips if the candle, the 1 hour candle closes above that one, then we're able to take trade here. When we get to this place, that'll be the trap. That's where they're going to trap. That's where they'll trap guys who, okay, they'll trap here and now push all the way down. Okay, guys, if you got any questions in any of the pairs, please, you can go ahead and ask your questions now. GBP card, Felix. Okay, Felix, let's look at, but we don't want to deviate. How about EU and GU analysis? What is your technical and fundamental bias? I said something about, Felix, I'll get back to you, please. The EU and GU, I did analysis on DSY. Okay, you can see this USOIL, US 10-year bond yield. This US 10-year bond yield is positive, sorry, is inversely correlated to gold. There's been a level of strong support here over the time, and we are seeing it getting broken. And that is what I actually planned to see, what I actually wanted to see. Yeah, you can see that I already marked this, a break. And as this is dropping, gold will go up. As it's dropping, gold will go up. So this explains why gold is going to go up. All right, so the DSY, I want to use DSY to give you a perspective on okay, let me DSY. Dollar strength index. I want you to give you perspective on GU and EU. Okay. If you let's move to it. The DSY had been bearish. It's been bearish for a very long time now. You can see that on the daily time frame. It's been bearish for a very long time. Now, if I move to 4 hours time frame, and that's actually pointing to actually confirming the recession being expected to come in the US. Okay, 4 hour time frame. You can see here. Let me do something for you. Okay. From the time you touch here, we can do a short-term trend line. Let's do a short-term trend line here. We know that overall direction is bearish. Okay, doing a short-term trend line here, we can easily see a double bottom chart formation. This happened last Friday. Okay, and it pushed back up to this area. It touched the trend line. It touched it. All right. You can also see some structures here. I can see some structures here. This was a previous level of support that became resistance. It gets broken and now it's retesting it. This is typical of price behavior. Okay, you can see this like this. It comes back to this level and then goes back. And a lot of times it will agree with the Fibonacci retracement tools. This is what we call confluence. Price does this a lot when it wants to do a change in direction. So you can see how the market have been pulling down, up, back to the trend line. It came all the way down, breaking this low, retested the low now and came down. Fine, this is in tune with the downtrend, but it failed to break this low, this particular low. So we expected something like this to happen and then probably get back here. That's a typical of downtrend market and now come down. But this did not happen. It formed double bottom here, double lows here, push all the way back, breaking this previous level of resistance, support resistance, and it came here to retest it. All right. So if we use a Fibonacci retracement tool, if we can pull that from here to this level, sorry, there's a low here. I'm supposed to take it from here. Okay. Now back to this level. You can see that this structural level, confluence level here coincided exactly with this choice zone of retracement between 50 and 61.8 retracement. And you can see a hammer. There's a hammer there that is forming. So my expectation for the DSY is to correct as a result of the safe haven status of the dollar. Okay, safe haven status of the dollar. Dollar is the global reserve currency, and most investors push in funds when there's a distress kind of in the economy where they are doing business. They move funds anywhere, even in Nigeria, in Ghana, in South Africa. Whenever you observe that the local currency is going to drop value, you move your money to dollar. All right. And then if everything is stabilized, you move it back, you can even make some money doing that. So you can see this, my expectation on DSY. I'm using this DSY to explain to you the direction of GU and EU, because those two guys are inversely correlated to the dollar strength. Okay. Oh, sorry. There's something I wanted to do. Okay, here, market push into this zone. I want to move it to 1 hour now, so we can see that correction very well. Price pushed to this zone and did kind of rectangle continuation here, correction. All right, so it came back here. From here, it made another impulse. This is a second impulse now. So I'm looking at that Elliott wave also playing out. I'm looking at Elliott wave playing out too. This is the impulse, this is the correction, one impulse, a deeper correction, then another impulse to the trend line. So when this happens to this trend line, when it gets to this trend line, we'll be expecting a massive drop. Okay, so we're taking it one after the other. So this trade pushes to the up. This is the first one. It has happened. It's corrected. Second one has happened. Currently, we're experiencing the correction here at this level, and this is giving us a bullish flag, and that bullish flag in the making. Another bullish flag here. So my expectation is that this DSY will break back or push back up to this level. And when that is happening, the GU and the EU will begin to drop. So let's go to Euro USD and observe some patterns there. We made a call last week, Friday. Yeah. We made a call last week, Friday. This is actually a bullish flag on Euro USD, which got broken here and then pushed back to this level. This chart is not marked, not well marked. If that would take a lot of time pushing down, but of course here is actually an area of the key level of support and resistance. That's around 1.1, if you could remember. Yeah, 1.1. You can see it. 1.1 is a key level in Euro USD. Could see this bearish engulfing candle here. If I move to the 4-hour time frame, you can see something better. Yeah, you can see this here. You can see what happened here. This is a sign that the market will push down, and we made this call, and we got about 140 pips. We made this call on the channel. We got, if you're following us on that channel on the iThrive FS Telegram community, all right, you would have found this trade. We made a call on this trade and it did over 140 pips, all right, before the correction started. Okay, so this was that sign of this bullish, bearish move. Okay, so I would like to move to lower time frame, 1 hour. Okay. If I do that, let me remove some of these distracting lines. Okay, you can see what's happened here. And we are also looking at structure, price structures. There is a level of liquidity line here. It just fake breakout and push. So line around here. Price has gotten here. This is the overall driver now. You can see this very strong engulfing candle at that psychological level of 1.1. And it caused the market to move all the way down to this point. All right, and it started making a low here, 1, 2, it did a correction. It made this impulse to this place and did this correction and then did another impulse. And currently running a correction back. So I would like to check my level, Fibonacci retracement level, to know the likely level where to get to, and the correction will be over. And you can see this same zone, structural zone that we have here, previous lows, okay, which usually will become a confluence, turning into a previous level of support, turning to resistance, might be playing out here, might be playing out here. All right, so we shape that zone very well. That is here. Remember, in the Elliott wave, we still have another leg that has not been completed. This is one correction, two correction, then the third one is supposed to come. And if this happens, we're going to be seeing this drop. So we can be looking at some structures around here. Okay. There are some zones here too, conflict zones around here. Where the market can get back to. So our analysis on EU still bearish. So this is the direction on EU. Okay, bearish. So I expect this 5 waves to complete. 4 and then 5 to complete. So how far we may not be able to know, but when we get a confirmation for a sell, yeah, okay, we already did a call, on this. Yeah, we already did a call on this to sell this Euro USD. All right. All right, Felix was asking about GBP card, so let's bring that to you. GBP card. Not looked at this pair for a while now. Trying to mark some zones here. Okay. From the monthly time frame here, we definitely can see without any shade of doubt that the market for the GP card market is bearish. Is bearish. Just me looking at the monthly time frame. Okay, so you can get some support levels over here. Sitting out time. So just a quick. Okay, so here, this is weekly time frame. I can see that the Elliott wave 1, 2, 3, 4, 5 already completed. Okay, so there is an expectation for the ABC now to play out. Okay, let me move this to 4 hours and look what we got. All right, so this is the A. After the 5 waves push up, there will be a correction in ABC. This is the A leg, then there's the B leg. Let's check whether it's following the fib construction. This is it. So from here to here, it retraced exactly into the zone, the 50. You can see this push all the way down. It retraced to between 50 and 61.8. All right. And it's coming down now. It respected it, so it's coming down. Okay, so it's very obvious from here. You can see from here. I tried to do a very good analysis for you now. The overall direction is bearish. Okay, so we're expecting more drops on GBP card. Price will drop down. It's going to complete that drop. Can see some price conditions here. This is a result of another ABC. You know, you can have different ABCs, short ones, 1, 2, and 3 coming down. So price at least we get here. There is a support at this zone. Felix, there's a support here at around 1.66250. There's a support around 1.6650. That's this area. So we still have, of course, price will break this zone, but there'll be some reactions when you get here to break this zone and continue to get to this level for the third leg correction. This guy big now. For the third leg correction. Let me check where that matches in structure. Okay. All right, so this is it. Firstly, you have to look from here. Can look to sell. We still have price from here to this point. That's close to 100 pips. Close to 100 pips. Let me check. The news calendar for today. Okay, there is the last news on the pound is CBI sales. That's the Confederation of British, Industry Sales Index. It came out weaker than expected, and that is explaining That's actually causing the pound to drop in strength. And okay, we can see that the road is clear. The road is clear for this GP card to continue downwards. So if we move to 15 minutes time frame, we can look for some opportunities. If I had seen it earlier around here, would have taken a trade at the break of this zone. But you can still do some scalping down to this place. So the GBP CAD or the G card has strong potential of moving all the way down to the 1.6650. When this area, this support is mitigated, we're expecting the next drop in price around price will get again at 1.62550. So you still have a whole lot. So this can be traded in portions. All the way down. So you can target this level first. Okay. And then final destination 1.62550. I hope this helps you, Felix. Felix, I hope this helps you. All right, guys, please can you further up on GB card, please? Okay, I think I've done justice to that, Felix. Okay, guys, thank you so much for joining this stream. I'm sorry we had to take about 23 minutes into the time. I think the questions and all the valuable information we brought to you today. Let this guide your trading. If you are coming here for the first time today, I would like you to like this video, share it with your contacts, and then subscribe to our channel. You can also join our iThrive FS community on Telegram. You can join us on TikTok. You can join us also on Instagram. We have very rich, content that we bring to you there on daily basis. Next live analysis and trading will come up on Wednesday, the same time, 11 p.m. GMT plus 1. Until then, have a very lovely trading week.